Joining me now to discuss the print is Morgan Stanley's Erik Woodring. Erik, great to have you on. I wonder if, first of all, you just give me your sense of why the stock is reacting. Obviously, it's a sloppy tape, but if there's something your clients are suggesting gave them pause.
Sure. Hey, Mike, thank you for having me on. So if we take a step back, I actually thought this was one of Apple's more impressive earnings prints in quite some time. You got upside to the June quarter results, even when you take away the fact that there was some pull forward and maybe some one-time benefit from discounting in China. Services was very strong. That was a key sticking point leading up into the quarter. Obviously, that accelerated. Gross margins were strong, and frankly, the guide for the September quarter was much better than expected. So all across the board, again, overall stronger than expected. I think the areas where maybe there's some nitpicking is there was some pull forward that benefited the June quarter. As we know, September is typically the quarter that Apple launches its new phone, and therefore it's really a sell-in quarter. And so the September quarter guide is maybe a bit more reflective of sell-in as opposed to sell-through. But really, when we take a step back, I think what we've heard this week and maybe over the last 2 weeks has been rhetoric more concentrated around tariffs. And as you know, right now, Apple has exemptions on tariffs for most of their main products, but Section 232 tariffs do pose a threat, and they are imminent. We would say if there's a, call it 15% tariff on semiconductor content for a company like Apple, that could be, on an annualized basis, something like a 200 to maybe 250 basis point headwind to gross margins. That's almost a 10% EPS headwind. So just to put things in context, my numbers went up 3 to 4% overnight, but that looming threat of tariffs still stands, and I think the market is very focused on that point because they are so imminent.
Tim Cook had a lot to say, at least in general terms, about AI and Apple's commitment to it. Also expressed a willingness to do more M&A. Is that satisfying investors right now?
I think it helps move the needle in the right direction, quite frankly. I think there's more that needs to be done, especially I think we need to learn a bit more about Apple's strategy really around building versus buying versus partnering. But the rhetoric around increasing AI investments, I think that's what the market wants to hear. Again, it's completely different than what we hear from the rest of the Mag 7, right? Apple's spending $3.4 billion per quarter on CapEx, not $20 billion plus. But that 3.4 is up from 2.9 2 quarters ago, and it is trending higher. So Apple's spending, I think investors like to see that. And then Tim, acknowledging that they are open to M&A, while I might not necessarily think that's going to be a lever they pull, at least shows that he's willing to consider a multitude of options to make sure that Apple presses forward on their AI strategy. Again, I think that optionality is what investors want to hear. So we took the proper steps forward. Still, clarity still needed. But that was probably the most transparent I thought Apple has been about AI on an earnings call, probably ever, quite frankly.
Yeah, we'll see. As you mentioned, there's a couple other potential catalysts or points of clarification coming up in this story. Your target 240. We'll see how it goes. Erik, thank you very much.